In this session we going to learn about income under the head of salaries. Section 15 to Section 17. Before that, if you're watching my video without subscribing to my channel, do subscribe and like the video. It motivates us to upload more. This channel runs on without monetization. We don't earn any income. My only purpose, I opened this channel to share knowledge among students to score good marks. All I need is your support, so subscribe and like my video. Voluntarily retirement scheme. Lump sum payment or otherwise received by an employee at the time of voluntary retirement would be taxable as profits in lieu of salary. Compensation received is exempt from tax if the following conditions are satisfied. Eligible undertakings. The employees of the following undertakings are eligible for exemption under this clause: public sector company, any other company, an authority established under a central/state or provincial act, a local authority, a cooperative society, an university established or incorporated under a central/state or provincial act, and an institution declared to be an university by the University Grants Commission, an Indian Institute of Technology, such institute of management as the central government may, by notification in the official gazette. No exemption if relief availed under Section 89. Where any relief has been allowed to an assessee under Section 89 for any assessment year in respect of any amount received or receivable on his voluntary retirement or termination of service or voluntary separation, no exemption under this section shall be allowed to him in relation to such, or any other, assessment year. Further, once relief is claimed under Section 89, the right to claim exemption in respect of VRS compensation is lost forever. The maximum limit of exemption should not exceed Rs. 5 lakh. Such compensation should be at the time of his voluntary retirement or termination of his service, in accordance with any scheme or schemes of voluntary retirement, or, in the case of public sector company, a scheme of voluntary separation. The exemption will be available even if such compensation is received in installments. Quantum of exemption. Least of the following is exempt. Least of the following is exempt. Actual compensation received Rs. 5,00,000. The amount receivable on account of voluntary retirement or separation of the employee must not exceed the amount equivalent to 3 months' salary for each completed year of service, or salary at the time of retirement multiplied by the balance months of service left before the date of his retirement or superannuation. Following guidelines should be noted for the purpose of claiming exemption. Rule 2BA. The schemes should be framed in accordance with such guidelines, as may be prescribed, and should include the criteria of economic viability. Rule 2BA prescribes that the exemption under this section would be available to an employee who has completed 10 years of service or completed 40 years of age. However, this requirement is not applicable in case of an employee of a public sector company under the scheme of voluntary separation framed by the company. Exemption under this section would be available to an assessee irrespective of the regime under which he pays tax. The employee must not be a director in a company or cooperative society. The scheme results in overall reduction in the existing strength of the employees. The vacancy caused on such VRS/VSS shall not be filled up. The retiring employee shall not be employed in another company or concern belonging to the same management group. Salary for this purpose means basic salary and dearness allowance, if provided in the terms of employment for retirement benefits, forming part of salary, and commission which is expressed as a fixed percentage of turnover. Valuation of exemption in respect of leave travel concession. An employee is entitled to exemption under this section in respect of value of travel concession or assistance due to or received by him from his employer or former employer for himself and his family, in connection with his proceedings on leave to any place in India, or to any place in India after retirement from service or after the termination of his service. The benefit is available to individuals, citizens as well as non-citizens. In respect of travel concession, or assistance for himself or herself and for his/her family. Family here means spouse and children of the individual, dependent parents, brothers and sisters of the individual who are wholly dependent on him. Exemption under this section would be available only to employees exercising the option of shifting out of the default tax regime provided under Section 115 BAC, 1A. It is not available under the default tax regime under Section 115 BAC. Availability of exemptions. The exemption in all cases will be limited to the amount actually spent subject to such conditions as specified in Rule 2b regarding the ceiling on the number of journeys for the place of destination. Under Rule 2b, exemption will be available in respect of 2 journeys performed in a block of 4 calendar years commencing from the calendar year 1986. Where such travel concession or assistance is not availed by the individual during any block of 4 calendar years, one such unavailed LTC will be carried forward to the immediately succeeding block of 4 calendar years and will be eligible for exemption. For example, an employee does not avail any LTC for the block 20 to 18 to 20 to 21. He is allowed to carry forward maximum 1 unavailed LTC to be used in the succeeding block of 20 to 22 to 20 to 25. Accordingly, if he avails LTC in April, 20 to 22, the same will be treated as having availed in respect of the block 20 to 18 to 20 to 21. Therefore, he will be eligible for exemption in respect of that journey, and 2 more journeys can be further availed in respect of the block of 20 to 22 to 20 to 25. Exemption shall not be available to more than 2 surviving children of an individual after October 1, 1998. However, this restriction does not apply in respect of children born before October 1, 1998 and also in respect of multiple births after 1 child. Amount of exemption cannot exceed the amount of expenditure actually incurred for the purposes of such travel. It is allowable only in respect of fare where the journey is performed on or after the October 1, 1997, the amount exempted under Section 10(5), in respect of the value of LTC shall be the amount actually incurred on such travel subject to the following conditions. Look at the slide while listening to this audio. Where journey is performed by air. Amount of economy class airfare of national carrier by the shortest route, or the amount spent, whichever is less. Next, where journey is performed by rail. Amount of AC first class rail fare by the shortest route, or amount spent, whichever is less. Next, where the places of origin of journey and destination are connected by rail and journey is performed by any other mode of transport. Amount of AC first class rail fare by the shortest route, or amount spent, whichever is less. Where the places of origin of journey and destination or part thereof are not connected by rail. Where a recognized public transport system exists. First class or deluxe class fare by the shortest route, or the amount spent, whichever is less. Where a recognized public transport system does not exist. AC first class rail fare by the shortest route, as if the journey had been performed by rail, or the amount actually spent, whichever is less. Value of leave travel concession provided to the High Court judge or the Supreme Court judge and members of his family are completely exempt without any conditions if they exercise the option of Shifting out of the default tax regime provided under Section 115 BAC, 1A. Allowance. Allowances are monetary payments made by the employer to the employees for meeting specific expenditure, whether personal or for the performance of duties. Under the Income Tax Act, allowance is taxable on due or receipt basis, whichever is earlier. These allowances are generally taxable unless some specific exemption has been provided in respect of such allowance. Various types of allowances normally in vogue are discussed below. Allowances exempt to the extent actually expended for the official purposes. These allowances are given for official purposes, and lower of the below two is the exempted amount. Amount of allowance actually received from the employer, or amount spent for official purpose. Traveling allowance. To meet the cost of travel on tour or on transfers, including any sum paid in connection with transfer, packing and transportation of personal effects on such transfer. Daily allowance. For ordinary daily charges on account of absence from his normal place of duty on tour or journey in connection with transfer. Conveyance allowance. To meet the expenditure on local conveyance in performance of official duties if free conveyance is not provided by the employer. Helper allowance. Any allowance granted to meet the expenditure incurred on a helper where such helper is engaged in the performance of the duties of an office or employment of profit. Please note that this is not related to servant allowance. It is a different concept we'll learn later. Academic or research allowance. Any allowance granted for encouraging the academic, research and training pursuits in educational and research institutions. Uniform allowance. Any allowance granted to meet the expenditure on the purchase or maintenance of uniform for wear during the performance of the duties of an office or employment of profit. Here in allowances topic you should keep in mind that an employee, being an assessee, who pays taxes under default scheme who is under Section 115 BAC, is entitled for exemption only in respect of traveling allowance, daily allowance and conveyance allowance. Allowances meant for personal expenses exempt to the extent notified by rules. In these allowances, the actual amount spent by the assessee is not relevant. Lower of the below two amount is exempted amount. Amount of allowance actually received from the employer, or limit specified in the Act. We only going to see exam related ones. Watch it without skipping the video. Let's see allowances and their extent of exemption. Children education allowance. Rs. 100 per month per child up to a maximum of 2 children. Hostel expenditure allowance. Rs. 300 per month per child up to a maximum of 2 children. Tribal or scheduled area allowance. Rs. 200 per month. Transport allowance. Rs. 0.3, 200 per month in case of blind or handicapped employee. Underground mines allowance, which is people who work in coal mines. Rs. 800 per month. Allowances granted to employees of transport system to meet personal expenditure during his duty, provided he is not in receipt of daily allowances. Lower of below 2 is exempt. 70% of allowance received from the employer, or Rs. 10,000 per month. Any special allowance in the nature of counterinsurgency allowance granted to the members of the armed forces operating in areas away from their permanent locations. Rs. 3,900 per month. Any special allowance in the nature of high altitude allowance granted to the member of the armed forces operating in high altitude areas. For altitude of 9,000 to 15,000 feet. Rs. 1,060 per month. For above 15,000 feet. 1,600 per month. Any special allowance in the nature of special compensatory highly active field area allowance granted to the member of the armed forces. Rs. 0.4, 200 per month. Any special allowance in the nature of island duty allowance granted to the member of the armed forces in Andaman and Nicobar and Lakshadweep group of islands. Rs. 0.3, 250 per month. An employee, being an SSC, who pays taxes under default scheme that is under Section 115 BAC, is entitled for exemption only in respect of transport allowance granted to an employee who is blind or deaf and dumb or orthopedically handicapped with disability of the lower extremities of the body to the extent of Rs. 3,200 per month. Allowances which are fully taxable. City compensatory allowance. City compensatory allowance is normally intended to compensate the employees for the higher cost of living in cities. It is taxable irrespective of the fact whether it is given as compensation for performing his duties in a particular place or under special circumstances. Entertainment allowance. This allowance is given to employees to meet the expenses towards hospitality in receiving customers, etc. The Act gives a deduction towards entertainment allowance only to a government employee. Dearness allowance. It is fully taxable allowance. It is of following two types. Dearness allowance, which is forming part of salary for computation of retirement benefits as per the terms of employment. Dearness allowance, which is not forming part of salary for computation of retirement benefits as per the terms of employment. While calculating salary were in the question no information or silent about dearness allowance, it is to be assumed that dearness allowance is not forming part of salary. Medical allowance. It is a fully taxable allowance. Lunch allowances. Tiffin allowances. Cash allowance. Deputation allowance. Overtime allowances. Servant allowances. Warden allowance. Family allowance. Project allowances. Electricity allowances. Allowances which are fully exempt only under the optional tax regime, that is the normal provisions of the Act. Allowances which are exempt in case of certain persons. Allowance to Supreme Court or High Court judges, any allowance paid to a judge of a High Court and Supreme Court under Section 22A subsection 2 of the High Court Judges, Conditions of Service Act, and Section 23 subsection 1A of the Supreme Court Judges, Salaries and Conditions of Services Act, respectively, is not taxable under the optional tax regime, that is normal provisions of the Act. Allowance received from United Nations Organization, UNO. Salary and allowance paid by the UNO to its employees is not taxable by virtue of Section 2 of the United Nations Privileges and Immunities Act. Besides salary, any pension covered under the United Nations Privileges and Immunities Act and received from UNO is also exempt from tax under the optional tax regime, that is normal provisions of the Act. Sumptuary allowance. Sumptuary allowance given to High Court judges under Section 22C of the High Court Judges, Conditions of Service Act and Supreme Court judges under Section 23B of the Supreme Court Judges, Conditions of Service Act, is not chargeable to tax under the optional tax regime, that is normal provisions of the Act. In cases, allowance to Supreme Court or High Court judges, and sumptuary allowance, above, the respective acts provide for such exemption, notwithstanding anything contained in the Income Tax Act. In case, allowance received from United Nations Organization, UNO, exemption is provided under the respective Act, notwithstanding anything to the contrary contained in any other law.